S. Naren of ICICI Prudential AMC. Naren, good morning. Thank you for joining us. Okay, Naren, where is the birthday cap? It's the 8th anniversary.
Yeah, congratulations. I think ET now has done a brilliant job over the last 8 years in promoting investor education and wealth. We are very deeply thankful for the continuous effort done in this area.
So, Naren, finally fund managers are endorsing media companies and that they've done good for the markets.
See, basically, ever since Warren Buffett has turned cautious on media, we have found it worthwhile to be careful in investing in media ever since he sold a number of assets. So actually, if Warren Buffett talks positive on media, you will see a massive re-rating of the sector.
Well, Naren, you are the big Contra investor. How is it that you're singing the same tune as Warren Buffett?
Okay, actually, I mean, clearly we do find interesting opportunities.
But Naren, you're quoting
Buffett. We do look for such contrarian opportunities where people have given up.
Naren, the Howard Marks follower has turned a Buffett fan. Things are changing.
This is Contra stuff happening in the world disruption. Okay, Naren, so we won't get into global gurus. Let's straight away talk. One of those days, I guess, we're having fun, I guess, on a birthday with Naren. So, Naren, I'm going to take a sip of water, settle myself.
Okay, I will take port. But Naren, let's talk about firstly the Contra bets. You've talked about as to how you've liked metals in the past. Metals as a sector has really worked out for you. What's not worked out has been your exposure to INFI in some of your top funds. Is it worrisome what's happening? Not INFI, I'm not talking stock or company specific, but what's going on with the IT sector? Because, there's the macro challenge, and then most companies right now seems to be facing that internal micro challenge as well. Net result, this sector has been completely an ignore and avoid from market standpoint. Are you still convinced about the prospects? Are you a Contra buyer in IT right now? What is it that you're positioning yourself?
See, actually, it's a very interesting sector because on one hand, you have cash flows. On the other hand, valuations are reasonable. You also have good corporate governance standards, and the ability to return cash is there to the shareholders in many of the companies. Against that, we have a situation where growth is slowing down, and you have a situation where the aggregate market cap of the sector is still around 10 lakh crores, which is not small. So I think the combination of these two suggests that, you should be somewhere in between. And that's what we have been of the view, that it's neither a extremely good contrarian buy, nor is it a sector to be ignored totally as some of the people are doing. And we are in this middle camp at this point of time. Against that, when we look at healthcare, we find that there is much more panic, and the market caps of many of the companies have come down to very reasonable levels. So from a contrarian point of view, we are much more positive on healthcare than we have been on IT in the recent past.
So are you making a case that pharma is where you would like to go? Because you've indicated to our viewers in the past that ICICI Prudential currently is a buyer in pharma. But my follow-up question is that, Naren, forget about US manufacturing problems. That will get sorted today or tomorrow because Indian promoters are smart. They know how to run their factories and how to clean their manufacturing processes. But my challenge, Naren, is that there is a price erosion which is going on there. And price erosion is bad news for shareholders.
Yeah, you're absolutely right, but you know that a bulk of the companies, the stock prices are also reflecting this price erosion. And in our view, this price erosion cannot continue forever because you have a number of companies which will exit the sector if price erosion continues in this manner. And I think globally, if you look at it, healthcare is one of the sectors as a percentage of GDP which keeps going up as the country becomes more and more prosperous. And you have a situation whereby on that count, India itself will become a good domestic market and a much bigger domestic market. And as most of us know, India has population which is much higher than that of US. So I think the outlook for the sector, when we look at from a 10 to 20-year view, it looks very good. And the current situation where every day some company is in the news and gets hammered becomes a contrarian opportunity from my point of view.
Naren, you were also talking about as to how telecom is a space that you liked. And, you know, about a year back, you were talking about as to how you see telecom headed in for this mega massive consolidation, which clearly has played out with Idea Vodafone now merging. What next for telecom? Because Reliance Jio continues to be a dominant player in the market, which has caused a fair amount of disruption. We've seen in the subscription numbers as to how most companies continue to suffer. Even though Reliance Jio was a freebie, now with the freebies ending, their numbers have also gone some bit of awry. But does the positioning on telecom remain as is? Are you still gung-ho about the prospects of the telecom sector?
I think it's one of the sectors which I would say is deeply undervalued from a 3-year view. Having said that, is the sector undervalued with a 3-month view? I'm not too sure, because many of the stocks and many of the sectors as stocks have got re-rated in the last 3 to 6 months. But if I look at 3-year view, I think we are increasingly dependent on data, and it is one of the items where costs in India is extremely low. And I think over the next 3 years, the ability of Indians to pay a little bit more for data certainly exists, and data is something which I would say is reasonably addictive, like mobile phone talk time has been in India. And I believe over the next 3 years, many of us would be using much more data than we are using today for a wider variety of things, including investing in mutual funds. And I believe that from that point of view, I think we are in a good long-term phase. Short-term, it's very difficult to say whether the rally is too fast in the short run. But on a 3-year outlook basis, I continue to think that telecom is one of the best sectors along with healthcare at this point of time.
As a house, ICICI Prudential has been communicating that it's time to check your asset allocation. And when I say asset allocation within equities, get out of small cap, get out of mid caps, focus on large cap. But my counter to that question, to that theory, Naren, is that mid cap is where the growth is. I mean, if somebody is looking at a cyclical uptake and a slightly above mean growth, then you will not find that with large cap stocks.
While that is true, what has happened is the large cap index has number of sectors which have got derated over the last 3 to 4 years, which includes tech, telecom, healthcare, banks, and consequently I believe that the sectoral derating that has happened in the large cap index gives scope for much better risk adjusted returns over the next 3 years in large caps over mid cap and small cap. I mean, our broad view is that, we believe that the markets are out of a phase where you should be buying very aggressively to a phase where we are currently in a boom. And in a boom, what we actually believe is that many investors forget asset allocation and focus only on the asset class doing well. In 2011 to 13, people focused on real estate and forgot other asset classes. And we are increasingly worried that people focus only on equity, which is the reason why we've been marketing products like the equity income category, balanced advantage, balanced kind of categories. Primarily because we think that, if people forget asset allocation when an asset class is doing well, always it leads to problems. Like people who forgot asset allocation in 2011 to 13 and invested only in real estate, today they've seen 4-5 years of no returns in that asset class, and which is what worries us, that if people ignore debt and other asset classes by focusing only on pure equity fund and not on categories like equity income and balanced advantage, they would be doing it. So I would say that, rather than have a large cap versus mid cap debate, I would say that it is very imperative for investors to focus on asset allocation and not to think that equity is the only asset class.
You're pointing me towards my next question then, Naren. From a year from now, do you think it would be equity or would it be fixed income which would give better returns?
See, actually, we are in a mid-cycle as far as equity is concerned, and as far as fixed income is concerned, we could be in the last 3 to 6 months of the entire easing cycle. So, it's very difficult to recommend fixed income in an aggressive way at this point of time. But once you put fixed income into an equity fund, like what you do in equity income or balanced advantage or balanced, you get the right elements where you can get good short-term returns out of the debt component, and you also get defense due to debt, and you get the benefit of equity being in mid-cycle and with the potential to give returns in the next few years. So I would still bet on, dynamic asset allocation category like equity income and balanced advantage over equity and debt at this point of time with a 1 year to 2 year view or even 3 year view.
The world is changing. 3 years is a long time, 5 years could be eternity. Half the companies which we are discussing today may not exist after 5 years. And that's largely because of the kind of new world we are in. Disruption, technology, artificial intelligence, and that's applicable even in manufacturing sector also. That's applicable in healthcare sector also. Manish Chokhani told me 2 days ago the kind of innovation which is happening in healthcare. You may soon have robots performing surgeries. So what I'm trying to understand from you is that, do you think it's difficult in today's new reset world to take a 3 to 5 year view on any business?
See, I'm not so worried about that, and I believe that India is a low-income country which has to become a middle-income country. And these problems come when you are an upper middle income country wanting to become a high income country. And I don't think we are in that phase in India. So I think when you want to go from low income to middle income, I think many of the conventional categories should see growth, and which is one of the reasons why India is a great market. If India was a middle income country, then we would actually have to worry more because it requires much more innovation, and disruption can play a much bigger role in determining where equity returns happen. But this low income to middle income, which is what India is aspiring to do at this point of time, suffers from lesser problems than other countries.
So Naren, literally, closing comments. I know we've extended our appointment with you. We were supposed to finish by 9:35. So another, couple of questions. Naren, let's also talk about the general positioning right now for financial inclusion. I mean, the fantastic thing which has happened for Indian equity market and for Indian investors is that the entire SIP culture has started. Do you think the kind of numbers which we are getting, which mutual funds are now raising on a monthly basis, on a daily basis, this is a trend in making, and this could be a long haul trend?
See, it is clearly a trend in making, but you have to remember that SIPs are great products with a very long-term view. When you are investing in a mid-cycle and the market goes to end cycle, at that point of time, SIPs also will be investing when the markets are high. So actually, we think that, products like the dynamic asset allocation category, where actually you keep selling as on the way up, is possibly a better strategy than actually averaging on the way up. So that's why we've been trying actually, because see what happens in a SIP is, today suppose the market were to go up for the next 2 years, effectively you're buying more every month as the market goes up. Whereas if you invest in a dynamic asset allocation category, it becomes reverse, that as the market goes up, you'll be selling. So actually selling on the way up appears to be a better strategy at this point of time than buying on the way up. That's how I look at it, and that's one of the reasons why we've been recommending products like equity income and balanced advantage kind of categories. If people like SIPs, we certainly think SIPs also should be in such funds, and also in fund sectors which are doing very badly, like technology and pharma and those kind of sectors, where actually when you do SIPs at this point of time, you're actually doing it when the sector is doing badly. And that makes it much more interesting at this point of time.
Well, all I can say is Howard Marks or Warren Buffett, Naren's investing style remains as is. He continues to be a contrarian in the market right now. Naren, always great getting insights from you. Thank you so much for being part of our special day.
Wish you all the best at ET Now. Thank you.
Thank you so much.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.